the S&P 500, the Nasdaq 100. We had some crazy news. Now we look at the chart, and guys, it has me excited, but that's not the big news today. The big news today is what's happening with this new AI chip ban, right? New AI chip ban, export ban would amount to geopolitical economic warfare, says analysis. Tongue twister, right off the rip. Now, you go a little bit deeper, and he explains exactly why, and this is not good. So we saw at the beginning of the day, we saw chips get hit, and then we saw them bounce right back. And I do want to say there's been a lot of tug and pull on these new chips and everything that's happening here since last year over the past 10 months. That's when we really saw the first major dip that went to lows on AMD and NVIDIA. Now, we also saw big buyers step in back in October when that happened, and we've, the rest is history. But let's go into why this is a big deal, what this means for the economy, and just kind of get you up to speed, right? It's not only targeting future economic growth, specifically of China, but it's also very, very military AI specific, which is the new frontier. Whenever we restrict economic sovereignty of a country, it becomes a pretty big red line. Now, this goes further into trade agreements, us having an open line of communication with China and other countries, what's happening in Taiwan. There's a lot of big issues. Now, I'm not taking a stance or saying we should fight the Chinese or this or that. I'm just giving you the news. NVIDIA also had an opinion this morning. NVIDIA sees permanent loss of opportunities from the China export curb. And they're not just talking about themselves as the company, they're talking about in general, just growth in the entire sector, right? That's what they're talking about. It would result in a permanent loss of opportunities for the U.S. industry also. Okay, now let me just tell you a little bit about what's happening here. Okay. That all gets said, this is all happening, and then today, by the end of the day, we get another big little tipper, right? You go in, and NVIDIA also, I do want to say, NVIDIA CFO came, there's no material change into earnings from any of the rules that were mentioned or said. There would change nothing to do with any of their current earnings moving forward or any of their guidance. So all of that, like NVIDIA said, would only affect future growth, nothing that they're doing right now. Right? We're trying to, based on what we're trying to do with these rules, is prevent what we think is going to come from getting to China. Okay? Because China has gained a lot on us, and we've gone over this quite a bit, but we don't want to talk too much about that right now. Now, the biggest thing here, again, really quickly, this is my Twitter. You can go follow if you want. But I do want to say really quick, I retweeted it earlier, but I want to make sure you guys can see this really quick. China talked specifically about their military, and today, what did they say? The U.S. must remove sanctions before any more military talks with China. Is it coincidental that this all happens today? Now, there wasn't an immediate dip on the market or anything like that, but this is kind of where we're at, stationed right now. Very big, two immovable objects are, hitting each other as we speak. Now, before we go into more content, because we have one big thing that did happen at the end of the market that pushed us up, we got to talk about here in a second. I have to ask you to consider doing two things: liking and subscribing. It helps out tremendously. I appreciate all the love and support. More content's coming. Do what you got to do. Unsubscribe if you need to as well. Also, the Discord link is down below if you are interested. Just to let you know, this is not a signal service, but it's to show you how we trade, why we trade, and hopefully get you to the point to where you don't need to rely on anyone, but also give you a hands-on, behind-the-scenes approach as well, right? Now, again, if you're trying to join Discord and you're like, oh my gosh, I need to get trades, I need to get signals. Again, I don't think it's the place for you, but giving you a visual of some of the trades that we did look at, and again, this is we only took 3 trades over on short-term trades at least, or scalps, over the past week. Nothing. So these are the only trades we mentioned. Yesterday, NVIDIA, we traded up to 520 or 420. We all mentioned that. Snow ran like crazy today from 176 all the way hit 179, and then it went absolutely ballistic today up to 190, obviously. So big plays on the day, and next play up there we're watching is Meta. I'll explain that later on in the video, but link is down below. But if you also want to get free education, go to home, hover over. So you just go to our website, link is down below. you hover over home, go to education, and you get all these articles that we write up for you absolutely free. And then on our channel as well, if you go over to channels, you can actually click on my personal channel and Jay's personal channel, where we have all of our education as well there. So check it out. Lots of content. You never have to pay for anything. We always have a free version, and then we also have the paid, which is more hands-on. But let's get back to it. Now, there's a lot I got to talk about here, guys. So first of all, we look at the charts, and the charts, we don't have to talk too much about this. We have Powell speaking early in the morning. He didn't say anything really different today. It was all the same stuff we expected. Now, off rip, you came into basically both of these levels. The first one was obviously around 15.15. The second one was around 15.215, 15.23. You came into that level, rejected, pushed back down. That's how we moved on today. There was no real bearish news that shot us down right here or anything along those lines, in my opinion. I'm going to tell you that right now. Now, at the end of the day, we started seeing some volatility. This move right here. Now, this comes all on the back of the bank stress test, okay? There's a lot of hype around this coming into the week, and very interesting nonetheless. Now, I want to say the first thing that's said here. Today's results confirm that the banking system remains strong and resilient. Let's get a little bit more zoom in there for you, for the the boomers out there that can barely see, right? Strong and resilient. Now, why is it strong and resilient? Now, I want to show you what they did. So basically, they simulated Armageddon on the economy. All 23 banks tested remained above their minimum capital requirements during the hypothetical recession, despite total projected losses of 551 billion. Under stress, the aggregate commodity equity risk-based capital ratio, which provides cushion. We're not going to go into all that, but needless to say, what did they say was going to happen? Okay, so this is what the premise is. If this happened, banks would not have an issue. Well, okay. A 40% decline in commercial real estate, a substantial increase in office vacancies, which is already happening and will probably happen more, and a 38% decline in house prices. Now, this is interesting because we talked about this yesterday. Over the past year, when everyone's like, houses are collapsing, rates are so high. What? Okay, everyone that's complaining about rates right now, of mortgages in America, 85% of homeowners have a mortgage under 5% on their interest rate. Okay, we need to understand that. So 85% aren't affected by this like 6%, inflation number, right? Or 6%, rate number. Number two, over the past year, while rates have skyrocketed from 3% to 7%, what's happened? Home values on average across America, that's including the worst markets like New York, San Francisco, Washington, and then as well as the really good markets like Texas and Florida, have only dropped by an average of 7.2%. Compare this to 2008. Compare this to 2000. Compare this to other type of economic crashes and catastrophe. Yeah, pretty interesting. The large projected decline in commercial real estate prices combined with a substantial increase of office vacancies contributes to a projected loss rate of office properties that are roughly triple the levels reached in the 2008 financial crisis. So they went ahead and said, what if this is worse than the financial crisis of 2008? We would still be fine. So this all in all was a giant win. That's what we saw, the market move up immediately after this. The bank stress tests, I think, are looking good. Okay. A lot of people keep asking. I'm not going to cover that yet. So that's where we're at right now. Tomorrow, Powell talks 2:30 a.m. I don't think it's that big of a deal. Not really paying attention. Friday is the day we need to be watching for with PCE data. We all know PCE is the most important pool of data. That's going to be huge. We saw Canada's. They beat. Core inflation started dropping for them. Australia, remember they rose last quarter or last month. They're dropping as well. Core inflation. We're seeing the path looking better for some of these other countries. Will this trend continue with America on Friday? We'll have to wait and see. Now, key levels we're watching moving forward here on Nasdaq and ES. Again, just quick visuals. Now, we already know where we're at on the Nasdaq, but look at ES. Ever so pretty. 4,400, a perfect break 1, 2, 3, push back up. Here at the end of the day, we look fantastic. Finger licking good, as the Colonel might say. We like how we're moving. We like how we're moving forward here. So all in all, I like the action. I'm looking for continued upside. As long as we're above 4,400 and 15,000 on the Nasdaq, I am looking for continuation. But what was that area we talked about yesterday? Remember, we talked a little bit about the IWM. We talked about the difference between risk on and risk off and how this is taking place here in the market. We talked about what was happening on these next levels, right? You came down, you tested the 200 SMA on the daily, right? You go to the 4-hour chart and we get a better visual. You test previous highs, perfect break, retest, breaking back up. Now, the weekly 200 SMA, you're breaking and mounting it once again today. All right, I'm not making, hey, these are just the charts. Now, what does the IWM and the Russell represent to us? A risk on versus risk off mentality. When we see the Russell get momentum, this is the same thing that happened last time. Remember, go watch the tape, right? That's why we don't delete videos here on this channel, right? You go back. Well, what happened the last time IWM was breaking up here? You had ES finally break above 4,200. Boom. You went crazy. You saw a rotation in the market, which further pushed ES up. What we wanted to see with the Nasdaq as well. So am I saying that we're going to break up tomorrow? I don't want to jump to conclusions. But if history is repeating itself like it did, a few weeks ago, I would say the odds are ever in our favor. Call me Katniss Everdeen, right? We're on a heater today, boys. We are on a heater today. So we like what's happening, risk on, risk off. We like the Fed bank stress test. Beautiful, beautiful action there. The bad news that's kind of looming is what's happening with chips, but we're seeing chips start to recover as well. You have AMD popping up here a little bit in the after hours, trying to get a little bit of love. AMD, one of my favorite semis here. NVIDIA, had a pretty bad start to the day, bounced back almost into 420, right? So I like the way that we're reacting so far, okay? Tesla, great bounce on the day. We had a little bit of a rant yesterday. You should go check that rant out if you missed it. Back to 260, right? This is the action we want to see, and it's playing out before our eyes as we speak. So that's where we're at. That's how we're moving. I love what I'm seeing here. Now, a little bit, someone in Discord requested this, so I'm gonna go over this really quick. Okay, DXY, terribly bearish, looks terrible. It's pushing down. People keep asking me about what's happening with rates and my expectations moving forward. I'm gonna give you my opinion really quickly. Rates are dependent solely on data for the 5 millionth time. If data comes up stagnant, the same as it is right now, they probably, based on what Powell said, will raise rates again. If core CPI, core PCE do not drop further, they will raise rates again. If core inflation drops, I think they will continue to be paused. Even though they said they expect to raise rates at least 2 more times this year, I believe that's a very conservative statement. If inflation takes a turn in their favor, I do not believe they will raise rates unnecessarily. That's my sole opinion. I've said this a million times. That's the story. That's the end. If we look at the dollar, I think the dollar is also weakening. It's a clear descending triangle. If you look at how you moved up, you got from point A to point B. You had all your volatility basically start here in November and December of last year. January, you mounted the 200 SMA on the weekly, and you pushed into highs of 414 over the next 6-7 months. Why? Because you were raising rates this entire time. Now, you were still raising rates here, but we were getting a little bit manipulated with our currency, and there was arbitrage going on with China and what other countries were doing with devaluing the dollar. Okay, we've gone over all that over the past few months, right? But as we're moving down, I anticipate, just like we did in 2020, when we only had cuts and pausing of rates, I do believe the dollar will show weakness down here as well. But again, I'm not going to trade the dollar. I don't really care right now. All I care about is risk on versus risk off and looking at where money is flowing in the market. What do we know? Money, in my opinion, is not flowing into the dollar, okay? I just don't believe it is. It hasn't been for a while because we're in a clear downtrend here. Now, if we look at oil, what's happening here with oil? Money's not flowing into this commodity because you're clearly pushing down to the 200 SMA and you're getting weaker, and weaker because you're in a clear downtrend here. Now, if we go into something like gold, which everyone knows and loves, XAU USD, gold right there. Again, a triple top, 1, 2, 3, and you've been pushing in a straight down, even more bearish than some of the other commodities, right? So what are we seeing here? We're seeing the risk off assets moving in a negative sense, which what does that tell us? As we look at the market, as we look at, the IWM, some of the risk on areas, they are moving up. We even look at something risky like Bitcoin, right? One of the riskiest assets out there, moving in an upward trajectory all the way since January. You look at the Nasdaq, or another risk on mentality. What's happening with tech? Going straight up. So in my opinion, this is a clear risk on versus risk off mentality, and what's happening in the market still points to more upside for me. If you have questions on that, comment down below. Would love to answer. But I wanted to cover that really quick. I didn't want to spend too much time here. We also look at VIX continuing to push down. Pushing down. Again, VIX still points to more upside for me as well in the market. The only area that I don't like is what's happening with the yield inversions and the yield curve. You're still seeing the 2-year, 5-year, 10-year pushing up. But I will say on the day, you did see the 2-year show some weakness. The 5-year, they all were showing a little bit of weakness. But you need to see a lot more. We're not interested in the daily action here. We need to see bigger moves in the trend overall flipping. So there's no point in focusing on this data right now. This is the only concerning part, if anything, in the market right now, what is happening with yields. And yeah, that's the only concerning part whatsoever. But again, I want to highlight this bank stress test, okay? Because even if yields are a concern, the stress test, in my opinion, proved that big banks have nothing to worry about here. Based on the Fed, okay? All I want to say, this was pretty good for the market. I like the upside. I like the opportunity. Names I'm liking still. Google, AMD, Netflix. I got stopped out of it, but it's moving straight up. It's so beautiful and it's so disgusting at the same time. Looks really good. I think Meta is another prime player here, guys. I'm going to tell you right now, Meta is at the top of my list as we speak. You filled that gap like we thought you would at 290, but in my opinion, Meta still looks fantastic. Look at the action that you're having here. A clear ascending triangle forming out here, pushing back up. As you look back to something like the daily chart here as well, and we get a little bit of a zoom, there's not much liquidity if you break back over 290. A quick push into 300 would most likely happen, but this thing could easily start pushing back into 330, 320. Meta is really moving. Again, 305, 300 is my first target. That's where I'd be watching, but I'm really looking and loving this thing. If you get above 289.2, that's your area for confirmation. That's what I'd be watching. And again, it's one of my favorite names out there. I do like Snow as well. You got to break above and a retest here at the end of the day. Like Snow, still looks strong. Really good name out there as well. But overall, those are my favorite names in the market. I don't want to spend too much time. Also, be watching Microsoft to push back into all-time highs. I don't think it's finished, and I don't think it's done. I don't know why the chart's taking so long to load here. But Microsoft, I absolutely love it. You pushed into all-time highs here. You pushed back down. But it gives me Apple vibes. That's what this is reminding me of, right? So when Apple broke into all-time highs, remember we pushed up. We got rejected hard back down to 177. I was like, oh, this is over. It's over. And then you push it all the way back up again. Similar, like that's how I'm feeling here with Microsoft. Big fan. AI, they're pushing it heavy. Don't sleep on it. All gas, no brakes. I'll see you tomorrow. Have a good one, traders.